Good evening, everyone. Time for another silver update. I want to start off with the gold chart. We had a very interesting flash crash in gold. We went from about 1545 down to about 1515 on the 1 minute, and came right back. Actually went a little bit higher, fell back, went a little bit higher, and now we're kind of evening out. Maybe we can draw a trend line, maybe not. We'll see where this goes. So, interesting things going on. Of course, the silver chart, we are trying to rally from a low they put in. We're swinging $4. Here's $47.25 down to $43.50, $3.75 swing in about 1, 2, 3, 4, 5, 6, maybe 6 hours. So crazy market, very volatile. Of course, this weekend we had what I will term the Kabuki Theater, the puppet show, government puppet show come out. We had the royal wedding, we had the second fake birth certificate, and we had the Osama bin Laden Kabuki show. So I'm not going to go really far into my political views because I am opening a new station on YouTube, and it's called Conspiracy Nation. I'll be moving my conspiracy videos over to that channel because there's a lot I have to say about the conspiracies of what I will call the death rattle of the Anglo-American Empire as it slowly dies before our eyes. So, but I can't really address those issues on a silver channel. This is purely just a silver channel. So I'm going to direct everybody over to that other channel, and I'm going to be moving all my conspiracy related videos over to that channel. I have another Christian channel I'm going to be opening up. I haven't worked on that yet, so but ideally I'm going to have 3 channels, and so for further analysis on this, what I call Kabuki Theater weekend, you can go to my Conspiracy Nation channel. Now I wanted to look at some of the MACD resets we have here. Very interesting. If you look at our MACD reset we're on right now, we're actually down to negative 5.56. If we just draw a line here, we've got to start on the left hand side and just match that. But you can see when we draw a line to match this low, and we may go lower, but we're already reset lower on our MACD than mid-March, than mid-January, then early November. We're actually all the way back to September of last year on the MACD reset. So actually very bullish if you're just still looking at the MACD. Now when we get a tighter view, if you remember on the 30-minute I was tracking the buy and sell signals on the MACD. We had 2 sells, and we had a buy and a buy. So which is more profitable? Hard to say at this point. Draw a line and match them on the sells, and draw a line and match the buys. It does look like the sells, and we have another sell here. So it does look like the sells are starting to turn positive in the sense that the sells are giving more of a accurate read than the buys. That's a hard call to make, especially at market tops or turns, which this could be. Our support lines are roughly here and here, so we could get back to those. It would be a wonderful opportunity for those of you who haven't had the chance to pick up physical silver. You can see on our MACD on this 8-hour we go about almost to this trend line. So this trend line is projecting a turn roughly where we are. Maybe 42.50 is the bottom. So I told you yesterday to buy. Of course, When my video posted, it was too late. It had already moved a buck or two, but I didn't have any dry powder at the time, so I didn't pull the trigger, but I just thought I'd make the video to show you what I had done in the past and how I used the dramatic sell-offs to purchase physical because they happen to be tracked by sites like APMEX and Gainesville and even Tolving, so they actually update their prices in real time, and you can catch yourself a bargain if you catch these sell-offs. But then again, if the shills are right and we get a big downdraft, then you're going to see a lot more opportunities to get in the market. And I wanted to segue into something I want to address real quick here about backwardation in the market. There are some articles that came out recently about whether this is the top in silver, and one thing that's important to understand is that silver is still in backwardation. What you're looking at here is just a chart of the futures contract prices. So as you know, if you've traded futures, you have delivery months that go out. Our delivery months go all the way out to December of 2015. If you really wanted to, you could pony up whatever it is, as the CME raises margins every day. It's almost changing on a daily basis, but you could pony up whatever a percentage is of 5,000 times this amount and buy yourself some December 2015 silver at 44 bucks. So it cost you 44 bucks times 5,000, and if you wanted to wait all the way till then, you could take delivery. Otherwise, if you want to take delivery a lot sooner, well, actually we need to go by this price because that's not a settlement. So let's go to prior settlement, about 45 bucks in December 2015. Today it's going to cost you about 46 bucks. So this is what is termed in the futures markets backwardation. Backwardation means that the prices of the nearby contract are higher than the price of the further outlying contract. Backwardation is not a normal situation for a metals market. It is a sometimes situation for grains and things like that, but the metals markets are not seasonal markets, so they don't have those seasonal fluctuations. They tend to be in contango. Contango is a situation where the price gradually rises as you go out to the further months. So contango is a normal situation for this market. Backwardation is an abnormal situation for this market. And what backwardation means is that people are willing to pay a premium to get their silver now. Now, what that means, to summarize it and not go into a complex explanation, is that they're willing to pay a premium to get physical silver now on the off chance that when the time comes to deliver this physical silver, there won't be any and they'll be paid in cash. So that's what backwardation means. The markets are in backwardation for silver. So there still is a premium to close by delivery that's very bullish for physical, very bullish for the price of silver. So wanted to take a quick look here at the miners, because as I follow the threads on Zero Hedge and the other channels, I constantly hear the whines and moans and cries of those that are in the miners. And some of the bashers love to bash the miners. That's a big favorite of them. If you follow my Office series and my opinions, including Mining Stocks Explained, you can find that video if you go back. I have always advised against buying the miners. So I'm going to try to give you a brief explanation of why buying mining stocks is a really bad idea when you're operating in a suppressed market. So a lot of people who buy miners were shocked by this move here. Sometime in April, mid-April, the price of the miners started declining while the price of silver was rising. Now, a lot of people would ask why. Why would that situation exist? If you go out on a long-term chart, you can see that silver is still rising up to meet the price of the miners that have exploded. So there's a real simple explanation if you just think about it. And I wanted to bring up a topic that some have addressed on a couple of boards. If you remember, I don't know if you recall, but there was the trap miner in Idaho. I think he was actually in a Hecla mine, but he was in a collapse and they ended up recovering his body. He didn't come out alive. But if you remember the news story, he was about a mile below. And if you follow the threads on Zero Hedge, which has practically become a silver board, it's amazing how many silver stories they do, but a lot of the shills on there talk about how silver can be brought out of the ground for $5. Well, one thing you should wonder about, if silver can be brought out of the ground for $5 an ounce, then why was this guy 1 mile below the surface of the earth and died in this mining accident? So obviously silver is not that easy to get out of the ground, and the cost, and that's what I want to talk about here. The cost of mining silver. What's the cost of mining silver? Well, it's the cost of machinery, right? It's the cost of taxes on the land. It's the cost of oil to run the machines. It's the cost of the wages of the miners. It's the cost of all these costs, right? If you have an inflationary scenario in your country and you have a suppressed price of silver, if this price is suppressed, if they're actually not allowing silver to rise as high as it should, then the prices of the things that it takes to pull this stuff out of the ground, they end up not rising, or rising faster than the price of the commodity that you're pulling out of the ground. So if that's the case, then it is no longer profitable and it actually becomes a negative, and it's not surprising to see the price of the mining stocks fall as the price of silver rises. And the conclusion you have to reach from that is that the price of silver is not rising fast enough. It's not keeping up with the other costs that miners have to mine the silver out of the ground. So I've never advised buying miners. I do not advise buying miners. I advise buying the physical, taking delivery of the physical, and this just confirms that. I expect that to be more so in the future. All the other risks of mining stocks I haven't even mentioned, whether it be nationalization or other things, or just the fact that it's a paper promise. So we've got a very interesting market. We've got a flash crash in gold. We're going to wait and see how that resolves. We've got a violent correction in silver, and we have to wait and see what the Asians do with this violent move that they've made, and we'll talk to you next time.